wouldn't say it's surprising. I mean, revisions are a natural part of the process. We want to get a snapshot on the US economy as quickly as possible with over 150 million workers and tens of millions of businesses. Like, you don't do that in 2 weeks on the first try. So the revisions are part of the process, getting a clearer and clearer picture. So I kind of push back on that there's the system's broken. We're always going to get these kind of revisions. We've seen some upward revisions recently too. So, I think there were some things maybe that were a little puzzling in, say, last month's data, some, big jump in government employment. And so it takes some time to work out the numbers. So I wouldn't take too much from it. It just, all this underscores again, don't get too hung up on the latest number, look at averages, look under the hood. I think that's a consistent message.
Right. Non-farm payrolls was 188,000 3-month moving average. That comes down almost 20,000, 164. So that drops down to 3 months moving average. And the new 3 months moving average is 111,000. And that'll adjust. Dr. Sahm, is that politically acceptable in America to have a 90-day moving average of 111,000?
What really matters is that the people out there who are looking for jobs can get jobs, and they're good jobs, right? So the payrolls are kind of a tricky way to read that, just because we can have changes in how many people are out there looking for jobs. I still feel like the unemployment rate is a better place to start that conversation than the payroll numbers, though, of course, I mean, the difference is it matters to people. Even if you're in the 4.3, 4.2% isn't a lot of unemployed. But if you're one of those, it's a big deal, right? So and that may affect your vote. So, but I think payrolls is a tough one. And I will say, even with the 3-month moving average of payrolls being revised down, that's still well above what estimates were of what we think the labor force is growing at. So that could still be a good number.
I'm just, Claudia's so young, and you, Sweeney, you're just a kid. And the answer is 111,000 is un-American.
Oh,
we're supposed to be vibrant at 150, 200, 210, and those days are just evaporated.
Claudia, how do you think our new Fed chairman and the Federal Reserve is going to view this data point?
Today's report is going to keep their focus squarely on inflation. So what you're looking for are red flags, downside risks, and this doesn't show signs of it. I think the one place that I find somewhat disconcerting is, the unemployment rate did tick down to 4.2%, but it came with a 0.3 decline in the labor force participation rate. And so that's, people can retire, people can go and, the changes. That's not a thing the Fed gets involved with, but that does give me a little bit of concern just about the structure of the labor force, the workforce that's out there. So, I think they'll keep a watchful eye on this, but I don't see red flags in this in terms of them turning attention into problems in the labor market.
We welcome all of you across America for this American labor economy. A shock report here. Futures up 21, up 25. Now futures explode up 32. Dow futures up well over 200 points. The NASDAQ puts it on up 0.2%. Is now, I checked that, up 0.2%, now up 0.7% in the NASDAQ 100. The VIX, I've got a 15 handle on the VIX.
Wow, there you go.
15.98, plunging. Now that'll go through the July 1 nirvana that we saw the other day. Paul Sweeney with Dr. Claudia Sahm.
Claudia, we've seen a real dramatic decline in immigration into this country. How does that impact kind of the supply side of the labor market these days?
Right. Well, industries that have, rely a lot on immigrant workforce that can cause labor shortages. We haven't seen that kind of at an aggregate level. I think you can point to some industries where you can see some tensions, and even showing up. It could be part of the contribution to, construction wages rising faster than overall. But there are other reasons construction wages be rising faster. There's a lot of demand for AI build out. So it's hard to pull it out in the aggregate statistics, but I think there are hints of it in the industry level. And then, this can get a little complicated in terms of the measurement and the data. People need to be willing to participate in government surveys so we can understand their employment. I do worry that kind of the crackdown on immigration may be impairing the statistics some as well.
So what will the Fed do? I got 8 ways to go here, Claudia, in the time we've got left. Kathy Kaminsky on hold right now. We'll get to her in a moment. Perfect time to talk to Catherine Kaminsky about the quant view on the market. Dr. Sahm, the Fed here, I guess we've got a belief in, I'll call it collegial descent. We need to raise rates. A major Wall Street shop looks for 3 rate increases, et cetera. How abrupt over this holiday weekend will be the market economic shift given this report relating to Fed meetings for the rest of the year?
I don't think markets should react much to this report. I mean, we have a Fed that has committed to delivering price stability, which is getting inflation back to 2% over some period of time. What's it going to take to get it back to 2%? And there is disagreement among the committee about what it's going to take. And today's data does not settle that argument at all. We're just going to need a lot more information.